bring in Belinda Allen. She's an investment markets research analyst at Colonial First State, which manages around $135 billion worth of assets. And Belinda joins us from our Sydney studio this morning. Good to see you, Belinda. A good Monday to you. So again, we are in the midst of earnings season, and it looks like it's going to be a positive one this year compared to more declines that we saw last year, a year ago.
That's right. So last year we actually saw a fall in profits of about 20%. So any improvement on that will be seen as very positive for the Australian equity market. So obviously what we've seen in the Australian economy over the past 12 months has been some very steady improvement in growth rates, and we do expect that to start to flow through into earnings season. So we did see some improvements in resources profits, with Rio Tinto reporting last week a very strong report, obviously thanks to very strong growth out of Asia, in particular China, and rising commodity prices. So we would expect that to be a theme in the sector going forward, whereas we would expect some weakness in other sectors, in particular consumer sectors, which are struggling post-government stimulus. So we saw JB Hi-Fi report this morning, and also some weaker results over last week as well. So going forward, although we do expect a return to profit growth for most Australian companies, resources will definitely be leading the charge, and consumers as the laggards.
Hey, Belinda, you're talking about resources stocks. In fact, you mentioned that valuations still remain attractive down under. So what does that mean? If you want to couple that in with the earnings growth, is the resource sector still the place to be?
I think what we have to look at there is just the growth we expect out of that sector going forward. As I said, valuations are attractive for the sector as a whole. The Australian equity market's trailing just below on a PE ratio basis, and definitely resources, with all that strong growth out of China, iron ore and coal prices in particular have been very strong. And given about 25% of Australia's exports are now to China, and that economy continues to grow at a very strong rate, we would expect resources to be, one of the more positive aspects going forward.
Okay, one of the more positive aspects going forward. What about the consumer then in Australia? We mentioned how it's been tough going for these consumer names. If you're still expecting another interest rate increase from the RBA, does that mean consumer spending is pretty much already seen its peaks for the year?
What we have to remember here is that the domestic economy is actually still performing quite well. We've had very strong employment growth. Unemployment rate's now at 5.1%. We've had over 350,000 jobs added for the past 12 months. And consumers are actually still going through a process of deleveraging, so they're starting to wind back debt. So although they haven't been confident over recent months, we would anticipate with that stronger employment growth going forward that might see consumers start to return, especially given the Reserve Bank has been on hold for the past 3 months. But I guess
Belinda?
going forward, we do anticipate, yes.
Yeah, I got to ask you a quick question before we get going here. But I just want to talk to you about the elections. The RBA is being factored in, the economy firing on all cylinders. Does it really matter who is the next Prime Minister of Australia?
I guess not really. I mean, if we look at the policy differentials between the two major parties, there aren't too many big ones. We would anticipate the key for the Australian economies going forward is, once again, domestic economic conditions, and obviously offshore with, as I said, China, our major trading partner these days. That's really the key for the Australian economy.
Belinda, thank you for joining us. Belinda Allen of Colonial First State.